What's up guys, welcome back to DCA. So if you're new to this channel, what we do here is data analysis of the cryptocurrency asset class. We attempt to determine where the markets are headed based on a data-driven approach. So we go about doing this in different ways. We use math. For instance, we have a machine learning algorithm model which attempts to predict whether the market is overbought and likely about to pull back. And as you've seen in the past, if we just take a look at this metric here, when the market is overbought, like it was in 2017, like it was in 2021, and like it was back in 2013, this model tells us that the asset is very likely to pull back at that point. And that's indicated by it being in these highest levels. You can also see when it was oversold at these lower levels here. Okay, so even right now we're approaching some of the lowest levels that we've ever been at, indicating that the market may be oversold. And we just go about assessing the markets like this in many different ways. But what we're going to do today is take a look at two metrics that I've developed, and I'm going to explain both of them quickly. And we're going to use these in order to assess flows of the market cycle. So what we're looking at here in yellow is simply the 20-week moving average, okay? So if you take a look here at times that Bitcoin is below the 20-week moving average, that is typically indicative of an impending bear market. So if you go back to 2014, we got below the 20-week moving average. We tried to get above, we're not able to hold it as support, fell below, and we went into a long bear market. The same thing occurred back here in 2018. And then we saw a very similar thing here in May where we got below, went into a bearish segment of the market. We got above in August and tried to hold it as support, which we did for a very short amount of time. However, we're ultimately unable to do so, and now we're below it again. And you can see that in the past, anytime that we get above this 20-week moving average and we're able to hold it as support, and if we just look here, 2018 is the 2018 market cycle was a beautiful example of this. When you get above, you hold it as support, you're typically in a very bullish segment of the market. So we just rode right along this 20-week moving average all through the bull market. And then again here, back in May, we got above the 20-week moving average. We held it as support for a time here, and then that's when we took off into the market. Okay. And then anytime in the past, after a bull run that we've gone below the 20-week moving average, what have we done? We've went down to the 50-week. And inevitably, we've got to the 50-week, we've held it as support for a short amount of time, and then fell below it. So you saw that back here in 2014, you saw it back here in 2018, and you saw it just here in the end of 2021, heading into 2022. From there, what we've seen in the past is we typically go down to the 100-week moving average. So we have examples of that back here in 2014, again here at the end of 2018. And where are we at now? Well, we're testing this level between the 50-week and the 100-week moving average. So that's the basis of the first metric I'm going to show you here. And all this metric does is gives you that flow of the market by color coding the price of Bitcoin, depending on whether we are above in blue, all of those moving averages, or below, and they all correspond to the associated moving average. So if it's yellow, that means we're below the 20-week. But if it becomes green, as you see, when the green 20-week moving average, when the green 50-week moving average crosses over the price of Bitcoin, this metric turns green, indicating that Bitcoin is now below the 50-week, all right? And then so on and so forth. So here we have the 100-week. Anytime Bitcoin, the price of Bitcoin is below this 100-week moving average, it turns red, indicating that that's what we're below, okay? So when we get back above those levels, it turns blue. And notice, I'm just gonna quickly show you this. Every market cycle, it's the same pattern. We go blue, and then the second the market crashes, we go yellow, we stay above for a time, then we go down to the green, and then eventually we get down to the red. Blue into below the 20-week, below the 50-week, below the 100-week. And now what have we done? Well, we're seeing exactly something similar to what we've seen back in 2014. Now, that doesn't mean it has to play out like that in this market cycle. It simply means that in the past, this is how it has played out. And we've just seen a lot of things occur in a very similar manner to how it sort of happened in the past with Bitcoin. So this is what we'll be watching. Now, that's the first metric, and we're going to use that one in association with this new metric I'm going to show you here. So what this metric does is it allows you to compare any two assets or a group of assets. So if you wanted to do Bitcoin versus all of the altcoins, you could you could enter that in here, etc. So you can pick what you want to choose. But what we're looking at here, and we'll do one at a time, is when Bitcoin is at an all-time high price. So if we just sort of zoom out here, anytime Bitcoin makes an all-time high, it reaches up to this top level. Okay, so when you're at an all-time high, you're at this 100 level, right? And when you fall off of that all-time high, so it goes from 100 down to 0, this is a percentage. So in other words, if you're at 100, that means you're at your all-time high or making new all-time highs. And when you drop below it, that means you are now, so right at this point, for instance, we had just made an all-time high right here in March of 2017, and then we corrected. Where did we correct to? Back down to the 20-week moving average, in fact. And you can see that was about 73% of the all-time high, meaning we had come down around 25% or so, all right? Then in 2018, obviously we made all-time highs, as you can see right here by looking at this metric, all through 2017, all the way into December of 2017. Then the market corrected, we came down to the 20-week, we dropped below it, and where did we go? Well, eventually all the way down to 16, 17% of the prior all-time high. So meaning that Bitcoin was down around 83% at this time, 83 or 84%. All right. Then obviously back in November of 2020, that's when we made an all-time high again. We went above this prior 20K level. All right. So what we're going to do with this metric is first, the first thing you can do with it is you can compare two assets together. And, at first this may not seem like it has much relevance, but let me just quickly show you here what we're talking about. So we're looking at the times that Bitcoin makes all-time highs and the times that Ethereum makes all-time highs. And you can see that all through 2017, they're both making all-time highs. But there's some nuance to this, and this is the important part, because while these two graphs look rather similar to one another, they look rather similar. So we have in blue Bitcoin and in red Ethereum. There is nuance that matters and that we see play out in a consistent way over and over again throughout the market cycle based on the way money flows into this asset class. So you see that all through 2017, they're both making all-time highs. Notice then that Bitcoin actually starts to correct first, okay? And then Ethereum starts to correct. And as the market cycle goes on and on longer, as we're diving into the bear market, Ethereum eventually starts to correct harder than Bitcoin. So, like we said, whatever this number is, that is what percent you are at of your prior all-time high. So you can see that Ethereum at one point was down around 94% of its prior all-time high. So just a massive correction, all right? And Bitcoin, like we said, was down around 17%. And then at different stages of the bear market, or if you want to call 2019 a mini bull market, the differences between these two assets became immense. So at one point, Bitcoin was at around 65% of its prior all-time high. In other words, down around 35%. And at its best during that time, Ethereum only got back about a quarter of its total all-time high. So it was down around 75%. So what we can do then with this metric is, rather than looking at it like this, and this is what we're going to do today, you can come to inputs and select compare asset 1 versus asset 2. And then you get this sort of oscillator here, all right? And what this oscillator tells us is when it's moving up towards the blue, that means whatever asset you selected as number 1, in this case we have Bitcoin and we have Ethereum. So Bitcoin is number 1, Ethereum is number 2. So up here is asset number 1. And when we're moving towards this level, that means Bitcoin is much closer to its prior all-time high than is Ethereum. And when this is moving down down towards asset 2, which is going to be in red down here, that means asset 2, in this case Ethereum, is moving much closer to its prior all-time high. So by doing this, you can see how the market cycle plays out for Bitcoin in relation to another asset. Or if you wanted to, an interesting case would be Ethereum in relation to all of the other altcoins. So you can compare these in order to see how it plays out throughout the market cycle. So if it's in the blue, that means Bitcoin is closer to its prior all-time high. And as this value is rising, that means it's continuing to get closer to its all-time high in relation to the other asset. Okay, so that's an important thing to think about, because this shows you the relative performance at different stages in the market cycle. So that's what we're going to analyze today. And we're going to use this to do it. So remember, when we're in blue, this means that we're above the 20-week moving average. When it's in yellow, that means that we're above the 50 and the 100, but we're below the 20-week. When it turns green, now we've dropped below the 50, and when it turns red, that means we have dropped below the 100-week moving average. Okay, so what we have here is Bitcoin's price. So this is going to be the color-coded, moving average metric here that we talked about before, or indicator. And what we have here is a comparison with Ethereum. So the orange is the price of Ethereum, and this is the price of Bitcoin, and it's on a log scale. So obviously they're at different prices, but we can display them on the same graph using a log scale. And then down here we have that relative value with relation to their prior all-time high. So it can show us when Bitcoin is the asset that moves the market and when the altcoins then take over and start to relatively outperform Bitcoin. And what we see is essentially, if you come back here to this time in 2016, so if we just show this here, Bitcoin is sitting here not going parabolic, not going too crazy. We had just come out of a long bear market. In fact, if we just go look, we had just gotten back above the 200-week moving average. We had just gotten back above the 100-week moving average. So we had just gotten above, and we're sort of still trying to confirm that this is a bull market, that this is a real bull market that we're seeing. We haven't even got back above our prior all-time high yet. So we held it as support. And then Bitcoin, when Bitcoin is holding its 20-week and we're starting to confirm a bull rally, a new bull rally, Bitcoin, all the money flows into it because it is the premier asset. It is it's the asset that your institutions are primarily buying into. And, it gets the most interest when you're sort of in a time of uncertainty still. So Bitcoin gets above this 20-week moving average and then starts moving towards its prior all-time high. And then right around here at the beginning of 2017, it starts to make a new all-time high. So right here in March. And you'll notice that right as it's doing that, what happens? That's when Ethereum starts to sort of, gain some steam, because people start taking profits out of Bitcoin and moving them into altcoins. So you see right when Bitcoin starts to make an all-time high, right as we're getting up to this $1,200 level in February and March, we see this slide down towards Ethereum. But the first point we need to make is right here when Bitcoin starts to make its all-time high, that's when some of that money can flow out and flow into the altcoins. So we essentially see both Bitcoin and Ethereum go up. So Bitcoin goes up 3x and Ethereum goes up around 3.5x in about a month. And that's typically how you can sort of tell that, you may be in a place where things are getting way overheated and you're likely going to be potentially approaching a bear market soon, because that's what we see. Bitcoin comes down from there. We have another big correction. And you have to remember at the time, you don't know whether when Bitcoin corrects down to the 20-week here, is it going to be just like this time, and this time when it came down approaching that 20-week and bounced off of it? Well, the way you can tell is because we got a close below the 20-week and then continued to get subsequent closes below the 20-week. We tried to get back above, we're not able to, and continue down. And from there, when does Bitcoin sort of take back over the market from Ethereum? So notice Ethereum is gaining ground on Bitcoin this whole time. So basically from here to here, Ethereum is gaining ground on Bitcoin. But when does Bitcoin take back over? And it does that the second that it drops below its 20-week moving average, because that's basically the oh crap moment for the market. Everyone gets scared, everyone gets worried. Bitcoin just fell below its 20-week moving average, and it might be time to sell our altcoins now, because this may be something different than a normal correction. What you'll see is as we start heading below the 20, heading below the 50-week moving average, you can see that this gets green now, and we'll remove this. This becomes green. This just starts moving more and more in Bitcoin's favor. Okay, so as the bear market continues on further and further, the momentum is moving more and more towards Bitcoin. In other words, the percentage that Bitcoin is with relation to its prior all-time high is higher than that of Ethereum. Okay, so we're just comparing which is closer to its prior all-time high. And you'll see that as the bear market goes on, so once we drop below the 100-week moving average, there's this short little time here where, Ethereum gains a little bit of momentum, but then look what happens from there. Ethereum goes from only, with relation to Bitcoin, there's only a 10% difference, to the point where, we get up to nearly a 50% difference in 2019. So that means while Bitcoin is, while we're in this bear market phase, any money that is coming into the market is going towards Bitcoin. It's not to the same degree, not even nearly the same degree, going towards Ethereum. And then you just see basically we stay right in this range for the rest of the bear market, right in this, right here from 16 up to around 48% range. That's the advantage that Bitcoin has over Ethereum. So this brings us to the next important point. We obviously know that the bear market came to an end, hence the 2020 bull run. But how did that happen exactly? And it happened in a very similar manner to the way which we saw it back in 2018. Bitcoin holds this 20-week as support, holds it again as support here, stays just above it at 10K, anywhere from August through September, and then it sort of takes off. When it takes off, all the money is flowing into Bitcoin. And what happens? In November, right around here, Bitcoin starts to make an all-time high. And what did we say about last market cycle when Bitcoin got back to its prior all-time high in February and March? That's when Ethereum starts to get the momentum. So we see this momentum that Bitcoin is building. It starts to level off. And then once Bitcoin starts to, start moving again, then the altcoin, then Ethereum gains the momentum, and it does it massively. So we see Ethereum just go insane right here. So it goes from around, a price of around $400 all the way up to where we got, here at around $1,600 in very short order. And from that time then, you'll see that if we just make this larger here, you'll see that essentially Bitcoin and Ethereum were sort of bouncing back and forth to see who was outperforming the other. But like we saw back at this segment of the market cycle, when Bitcoin came down and fell below its 20-week moving average, we'll show that again right here. This is where Bitcoin fell below its 20-week moving average. Bitcoin started to get the favor. And what did we see immediately after that happened last time? We saw this place where, the favor came to Bitcoin, then it came to Ethereum for a short amount of time. Once we got rejected off of that 50-week moving average right here, that's sort of when Bitcoin took the reins and never looked back. So while Bitcoin was bleeding during that time, the altcoins were hemorrhaging, going all the way down to, points where they were down 95%. And, in my estimation, that's what we're likely going to see here again, based on the fact that this has played out identically to the way it did in 2019. Now, that doesn't mean the entire market has to play out like it did in 2018 and 2019, but it does indicate to us that if the market does in fact go below this 100-week moving average, if we sort of stay oscillating between this 50 and this 100, like we saw back here where we were just sort of in range bound in this region, quite realistically, we were in that range for around 7 months before we fell through. But if that happens again, I think you're going to continue to see this place where we sort of will, anytime there's a pump, Ethereum will sort of take the lead. But anytime there's a dump, it will come back to Bitcoin. And if we head down, if we do in fact drop below this 100, which is right now sitting at right at around here at 33K, if we were to fall below that, I think you're going to see this move heavily in Bitcoin's favor, just like we've seen in multiple market cycles in the past. So this metric is going to be available on the Discord channel, as is this metric and all of the other indicators that I put out. You can also find the DCA index risk model, which I showed you here, which is this machine learning algorithm model, which helps you to identify market cycle peaks and bottoms. You know, a lot of other channels who have things like this are charging a heck of a lot more money than free. So if you're interested in it, head over there. You can sign up for it. Give me a few days to send it out because, you know, I have to do it manually. So that's it for this one, guys. Until next time, as usual, see you.